we had an investor, really wonderful guy, and he basically just said, listen, this is never going to be a big venture business because there's not really the opportunity for hockey stick growth. What a venture investor needs to see is that there is an inflection point at a certain point in the business's life cycle where effectively growth starts to ramp really, really considerably without obviously costs following on a roughly even trajectory.
All right, well, Bede Moore, welcome to the Mentor List.
It's a real pleasure to be here. Thanks for having me. Down in Melbourne.
I know. Well, thank you for flying in and taking all the effort to get down here, and I'm glad you've arrived and on time and ready to roll. So Bede, I'd like to maybe start with getting straight into content, as we always do. I mean, we've sort of got a bit of a theme. We were having a chat, I think that was last week, about, what are we going to talk about? There's obviously a lot of areas we can go into, so I'll be interested to see where the conversation goes today. But Bede, we did sort of land on, navigating the future of startups and venture visionaries. That's a bit of a tongue twister. But maybe if you could just, your background will sort of start unfolding through the conversation, but maybe just talk us through what is the current sort of landscape of venture capital.
Let's talk mostly about Australia in that regard, because the firm that I work for, Antler, we're a global early stage venture capital firm with physical presence in 27 locations globally. So we do have a view about different markets, but it's always probably most interesting for your listeners to hear about Australia. The Australian venture capital market has evolved really substantially in the last kind of 15 years, right? For anybody who's a little bit longer in the tooth, they'll know that there was an earlier iteration of the venture capital industry that started in the early days of the internet and more or less fizzled out as a consequence of the dot-com bubble and failures thereafter. And there aren't really many surviving relics from that period. And then in around 2010, 2012, some of the bigger names of venture capital in Australia started. So your Blackbirds, your Airtrees, your Square Pegs, those sorts of firms.
And were they international then?
No,
they weren't here or out of.
They were started. They were started by variously by what you would call Australian entrepreneurs, right? I mean, they were founders in their own right. They were just founders of financial firms or venture firms.
Yeah.
In the case of Square Peg, led by Paul Bassett, famous founder of Seek, Melburnian. And this was the first kind of constellation of early firms. And when I started Antler in Australia back in at the very end of 2018, beginning of 2019, what the landscape looked like then was there were a number of firms, including the big three, but a bunch of others who had raised funds and who were servicing what you might call the post companies post or around Series A, but there were I think with the exception of Tidal and what was then called Tempest, now called Folklore, there were no firms that had a really specific mandate looking at seed stage venture funding. And actually, right before we got started, the federal government had said, "Listen, we need to change the regime to make it easier to raise these funds." They started what was called the ESVCLP regime, the early stage venture capital limited partnership regime, which made it much easier to raise funds. And that's been incredibly successful. I mean, it's obviously met up with a whole bunch of positive macro conditions, but now there are. Gosh, and somebody's going to ding me on the precise numbers, but let's say there's like I think there were 50 registered ESVCLP funds when we started, and that's now in the hundreds, right? So there's been this extraordinary proliferation and maturation of the industry,
which is great.
It's fantastic news. It's fantastic news.
I mean, before I guess bringing the Antler concept and forming that here in Australia. you're a founder yourself, and you mentioned sort of Paul Bassett, and I mean, imagine this sort of stuff was available when you were in that seed stage. You mentioned seed stage, Series A stage might get you to sort of just share what they are, because it is a bit of a different vernacular. Is that the right word?
Yeah.
Series A, B, C, like I get it. It's a sequence of funding, but in the founder community, it's sort of a live and die by these sort of terminology, and maybe, talking in the corporate space, it's sort of, these are established businesses where we're trying to drive innovation and things. But maybe, talk about sort of your background and how you ended up, I guess, looking at funding these businesses that are at such early stage.
Yep.
And then maybe a bit of your background as to why.
Yeah.
I mean, imagine that was there when you were doing it. That'd be fantastic.
Well, it wasn't. So I'll jump back just to provide some context. So I actually studied history. I studied Dutch colonial history, predominantly focused on Indonesia. So that was what I was very interested in, but realised very quickly I wasn't cut out to be an academic, and started my career like many lost former academics.
Where does that usually take you, studying Dutch history? I'm just curious.
Academia. I get that question a lot. They're like, what is that? That's not a real degree. In fact, I started my career at Boston Consulting Group, a management consulting company, and they called me a non-traditional background. I think that was their euphemism for saying I had a weird degree. Anyway, so I actually started in the Melbourne office and had an amazing experience, built a lot of understanding about how to operate in business. But, unlike a lot of my peers, when I got to the kind of first major promotion point, I've convinced the firm to transfer me to the Jakarta office, along with my then girlfriend, now wife.
So this is still with BCG?
Yeah, this is at BCG. And we had been at BCG in Jakarta for a period of 4 months. And we actually, this is before the days of InMail on LinkedIn, we both received, on more or less the same day, this LinkedIn friend request that just said, do you want to build the first $1 billion tech company in Indonesia? And it's kind of that Nigerian Prince story. You're like, really? Is this a real thing? But you clicked on it and met these guys, and they're like, hey, listen, we're going to build a massive e-commerce company, and we're looking for the people to run and build it, and would you do that here? And it just seemed like such an interesting time to be doing it, and at that point in time, just for context, this is end of 2011, beginning of 2012. There were only 4 sites on the internet in Indonesia that could transact. Right now, one of the largest venture markets, globally. And it was the very, very beginning.
Yeah.
And so that was an externally financed company. It was a company called Lazada. We built it into the largest e-commerce company in Indonesia. It was subsequently bought out by Alibaba. That was an extraordinary story. But very much a story about inbound finance, building, bringing know-how, whatever else. My wife and I decided that girlfriend at the time, we decided that we wanted to go and build our own company, and we put all of our life savings into renting a Chinese shop house on the outskirts of Jakarta and building our own tech business.
Yep.
And at the time, there was no funding for startups, and we raised money from some high net worths and friends and family, and we ran it mostly profitably, and it was what you would call a very much a bootstrapped affair.
What were you making? What was a product or a service?
So we started doing e-commerce services. So what we really wanted to do is saying, hey, like there is this revolution coming in retail and in Indonesia, and we can see it coming, and we've just been part of it working at Lazada. And what we really want to go and do is we're going to provide brands brands, wholesalers with the capacity to have an online presence. So we'll run their website, their online marketing. We'll do their logistics, which was a successful and common business model in that period of transition, as all of the big markets kind of transitioned into e-commerce, basically.
Yep.
But we realised, and this is actually probably my first major lesson my first major lesson in venture, is that when we went to go out and raise institutional money. So, like, firstly, when we talk about these rounds, let's just take a small digression to talk about that. You know, the rounds are pre-seed, seed, Series A, B, C, onwards until exit, right?
Well,
So
what are they? So okay, here's 50,000. Your pre-seed. What does that mean?
That means thanks, Dave. I appreciate that. I will take that 50 and I'll chat to you about it afterwards. What that means is that you have looked at me as the founder and you said, "Geez, I think this Bede guy is pretty impressive, and that idea sounds feasible to me, and I'm just going to give you. I'm going to give you the first. I'm going to give you the first check. I'm going to be there right at the very start of that company, and it should be, if the investor is doing their job right, it should be exclusively about the founder. Really, at that point in time, it's really saying, hey, I think that you're a brilliant individual. And I say that because obviously that is the practice that Antler is in. We're about day zero investing, which is investing in people at the inception of their business. Once you get to seed, unsurprisingly, there's probably a couple of co-founders. There might be a couple of team members. There's probably a product there. There's probably a product there that is making revenue, and there is some reliability with regards to how that product generates revenue. Okay, so that means that, in a good case, in Australia, you might be doing, let's say, $300,000, $400,000, $500,000 of revenue, and there's some predictability. If you give me $20,000, that I can turn that into a certain type of return of revenue. It's not always the case. There are big companies out there that are pre-revenue and raise $30 million because they're making alternative meat, and the size of the opportunity is such that, and the complexity of creating that product is such that you can't. You need an enormous amount of money to go ahead and do it, and so that's what a seed round can look like. But to make it a simple story, the version I gave is what like a slowly growing software company might look like at the seed stage.
Yep.
By Series A, what you have is a clear team in place. You have Pre-2022, you had about $1 million USD in revenue. You've been growing for 6 months at more than, say, 20% month on month. There were viable other products that could come online, and then there is also starts to be this bigger consideration of, hey, this is an asset. This company is an asset, and how is it going to evolve? How big is that market that it's playing in? Where is it finding users? Are there lots of them? Is it a growing market? All of these wider considerations. So that's the Series A is this important marker point. That's where, from a financial perspective, things start to become a lot more about the asset and less about the founders. I say that only in a rebalance. So, every investor will tell you that they're founder first, irrespective of if they're pre-seed through to, say, Series A investors. But there is a shift in focus, and historically, the Australian landscape has evolved. That we've had much greater density and maturity from that post Series A phase, because it's frankly, it's more similar type of investing to if you came out of an investment bank or a finance industry. It's something that might be a little bit more familiar to you.
Yeah.
So going back to your story, like where were we and what was happening in Indonesia? Well, there was very little happening. There were no funds on the ground when we first started.
Yeah.
And when we went to go and raise our seed round, we were looking to get venture firms to do it, and we changed from this e-commerce model. The e-commerce model that we had, of this e-commerce services model. We had an investor, really wonderful guy, and he basically just said, listen, this is never going to be a big venture business, because there's not really the opportunity for hockey stick growth. What a venture investor needs to see is that there is an inflection point at a certain point in the business's life cycle where effectively growth starts to ramp really, really considerably, without obviously costs following on a roughly even trajectory.
Got it. So they looked at your business model, saw that it was probably sort of a professional service, so you're growing through relationships versus, I don't know, Atlassian, which can be deployed internationally, and obviously the hockey stick is the
It's
lure.
about the scalability, right? So a venture backable business has this intense scalability about it. A services business does not. Like essentially a service, like it might not be a one-to-one, it might not be a one-to-one growth, but like fundamentally, if you think about a law firm, its growth is always constrained on the supply side by the number of smart lawyers that it can hire and train and put in place. Yep. Whereas at a certain point, a software business, obviously, if you're Facebook and you're serving 1 billion or whatever it is, 2 billion users, of course, you know the demands of your engineering team and your servers and whatever else continue to grow, but they're far outstripped in that growth by the number of users on the platform, and it's that scalability that is necessary from the perspective of a venture investor.
Got it. Because in my simple brain, I never really understood the excitement of going and getting money from someone else, and then you've got a loan and more pressure to then grow the business. But I guess if that's going to help you hit an inflection point and it's a scalable model, I can kind of understand that thinking.
It's probably one of the biggest misconceptions about, one of the biggest misconceptions about venture is, if you imagine, it's obviously like it's all very sexy to go and build your new startup and to get venture funding, right? But in truth, venture capital is a very specific type of finance that is suitable to really only certain types of businesses. And those certain businesses need to deliver outsized returns for those funds, for the economics of those funds to make sense. And so a venture capitalist will look at, like a Series A venture capitalist will look at a company and the valuation of that company, and they'll think, look, this needs to be able to 10x in value at least for it to be worth us even bothering to do an investment in it, right?
Yep.
And I mean, a simple way to think about it might be to say, well, look, some of these bigger funds at the moment, right? Your Airtrees and your Blackbirds and stuff. Those guys are starting to raise some of them have raised $1 billion funds, right? Well, they need to have a company that is worth whatever. They need to have a 10% holding or a 20% holding in a $10 billion company to be able to return a fund of that size back multiple times for their investors, right?
Yep.
And so what are the types of companies that are worth $10 billion? Well, they're not law firms. They're not services companies. They're software companies, predominantly. And, some hardware companies and a few others. But that's what venture investors are out looking for.
And it shows in sort of the multiples on sales of businesses that were in that scale mode. And multiples I've heard of 18, things like that. Whereas if you're a prop service, maybe you're looking at a 2, 3, 4, 5.
Yeah.
So it's that's quite interesting. So I had a question. So you've mentioned sort of pre-seed, seed, and you're sort of going away from the risk factor. So I assume if you're investing at pre-seed, there's a lot more risk for the person putting the money in. So there's probably a bigger ask on whatever the eventual potential outcome is. But you mentioned you guys are seed stage venture funding, which I find super interesting. And just knowing that you're the man responsible for, in the end, making it commercially viable, I'd be really interested in hearing whether it's a theoretical answer or maybe what you guys are doing at Antler around, because what are the stats? 1 in 5 businesses never makes it past 5 years or fails. So these are the sort of ones.
It's worse, yes.
So
it's a lot worse than that, Dave. Yeah.
How do you sort of, what's in portfolio theory and all these things? Is that what's at play? Like, how do you make your business model work when you're investing in such high risk type businesses and founders who all have different ideas? And are you interested in only industries of certain things? Like, what's the secret sauce?
Firstly, we're a global early stage investor, but our focus is pre-seed, and more importantly, what we say that we have defined a category called day zero investing. And day zero investing means, that we incorporate the majority of entities that we end up, or our founders incorporate, like, in and around us, the majority of entities that we invest into.
Right.
Okay. So that's what day zero is. Like, there
that's
isn't,
even more riskier than
there's
what
not
I was
even
saying.
an entity when they come and start working with us. That's right. And so yes, that is we are the most in a sense. Of course, that makes us that makes us the kind of most risk on institutional investor in Australia and in most markets, right? So what you're asking is also how do you get comfortable with that, and it's a little bit of the reason I never kind of finished the story of building in Indonesia, but just I'll briefly describe that, and then I'll come back to say like what attracted me to this model of Antler. Like, we went and we were told, hey, like, this is a services businesses, and we did reconstruct it as essentially an e-commerce company. And that did help us raise venture, and then we had this, like, we went through the ringer of talking to lots of venture firms and trying to raise money, and the experience of that, and it certainly not my favourite professional experience.
This is in Jakarta when you're doing this.
Yeah, this is
you're
in Jakarta.
Already sort of probably not as well networked.
That's right. Yeah. But building in a foreign country, not the easiest. And so anyway. That experience really taught me a lot about what it's like to be on the founder side, and what it's like to be in constrained capital environments, and what companies need to look like, and what have you. And I went, ultimately that company was unsuccessful. So my wife and I returned back to Australia, and a few years later, I was considering my next move, and I was actually talking to an old friend of mine, and he happens to be the founder of Antler. And he's like, hey, like, why don't you start the fund in Australia? Like, and so I said, okay, well, that sounds interesting. And I flew up to Singapore, and I said, okay, so what is this? And he said, look, we're going to go around the world, and in every market, we are going to look around for the best and brightest people, not who are building now, but who should be building. Because there's this enormous waste of human talent. There are all these brilliant people who are stuck doing, jobs that are frankly unproductive, or are not really making material change to, the economic tapestry of any particular market. And we want to find those people, and we want to work with them and help them to build brilliant companies, right? And I thought that that's an intensely human approach to building businesses. It was also, in a sense, a very inclusive one, right? It's like about effectively democratizing access to building great companies, and just a very open-minded one. Like, hey, let's find great people. And on the one hand, of course, it is really risky because, yes, it is not just 20. It's not 1 in 5. It's not 20% of companies that fail. It's the vast majority of companies that fail from that point of view.
Right.
So on the one hand, of course, that is just statistically very risky. But the part about it that isn't risky and doesn't feel risky is you're effectively stripping out all of the other considerations of other investors, which are about, like, how's this product working? What's the, what are the metrics? Is this a great market? And you're focusing on a single thing, and it's the person, and saying, hey, is this person brilliant? And could I see them creating something enormous? And there are lots and lots of examples, unfortunately, of people that we've invested into who are that, and then who get unlucky with the choices that they make, or the type of business that they start, or the way that some sort of macroeconomic condition, or what have you. But the foundation of that, I believe, is the core of any brilliant company. Like, there's a reason why there is a personality cult around all of the great kind of founders. It's because they are the center, and there is nothing that those companies couldn't exist without them. And Antler's focus is on finding those people in all of the different markets we work in.
So this is very interesting. So so you're not necessarily looking at directly at or at the front or the biggest part of the decision around industry, profit, maybe the scalability of the concept and idea, but it's about the person. So if I reverse engineered that, so for me, is it nature? Is it learnt? Is it the things that you're looking for? Are these intrinsic traits? Is there a certain age demographic that typically would be more likely to have the next unicorn? Like, what are some of the what are you looking for?
Yeah, it's great.
I mean, not to stereotype, but are there obvious things that are like, oh yes, tick that box, or are there boxes that get ticked?
Yeah. So I run our data team, which is something that we've only been building for the last year and a bit, and obviously the holy grail for us is to come up with the 7-point questionnaire that we can just put out to everybody and be like, yep, this one's a winner. Regrettably, it doesn't look like that, and the past research. Again, if you were to take this kind of like humanist view about it, the research actually really is kind of lovely. It's like, hey, how old do you need to be to create a $1 billion company? And the answer is any age, right? Like it starts to drop off past like 55 or something, but like effectively at any age you can create a $1 billion company.
Right.
If when you're talking about these monster like systems firms, they do have a tendency of being founded by people in their 20s, but if you strip them out, right? Like if you strip out the kind of Magnificent Seven or whatever it is, and include a long tail of other companies that you would be very happy to have founded and sold. Doesn't matter what your age is, right?
Okay.
There's also with regards to background, not a whole ton of evidence. Again, right. I like this. These are not studies that I've done. This is just stuff that I've read. I have heard, and I really, really do want to test this because I find this one a bit of a fascinating one. I have heard that one of the few statistics or features that is common amongst great founders is that they started a business before the age of 16. And if you think about it, it's like, okay, well, that's a kind of a cultural. It says something about who they are. They personally are a real. They're very entrepreneurial, right? I don't know whether it's a lemonade stand or fixing computers for everybody around the block.
It maybe implies a parental influence potentially.
Also potentially, right? But the things that there are kind of probably 4 traits that we commonly see and look out for. And as I said, the big thing is to be sufficiently open-minded to see these and to watch them evolve. And so the way that our model works is that we go out, we're constantly looking for people all around the world to come and work with us.
Yeah.
Our people come in and they apply. So in 2023, about 120,000 people globally applied to work with Antler. And we bring those. We bring a small selection of them in to come and work with us for a couple of months. And
come in as a funded
in a resident. No, they come in as as part of a residency. So in our offices, we've got offices in Sydney, in Brisbane, in Melbourne, and 24 other locations globally.
Yeah.
And we'll work with those people for a couple of months. And the purpose of doing that is to watch them, very often find a co-founder or otherwise to work on the formulation of what business it is that they're going to build. And, and I've said, obviously, we're very focused on people, but like if you come to me and say, hey, I'm Jim and I want to build Australia's top law practice, like we're not going to, you do need to be a credible venture. You need to be a venture backable business for us to want to work with you.
Yeah.
But putting that aside for now, when we look for founders, there are 4 things that regularly come up that matter, right? Number 1 is raw intelligence. probably my most highly valued company at the moment was run by the Irish maths champion, right? Like they're just and that's a kind of a, you know, I've got one of my other top companies, a guy did a joint degree in electrical engineering and finance at MIT. You know, like you need to have you need to be incredibly intelligent to run a big company.
Yes.
So
that's with formal qualifications, or is it
not necessarily in formal qualification? You know, and again, like you've got if you think about it, it's very easy to fall into the trap of going, well, okay, well then let's only troll for people from these universities or from these places, and you instantly you increase the density, right, of likelihood, but you're not going to catch everybody, and a big part of what we want to do is make sure that we are open-minded and looking for everyone. The second thing that, you know, is an associated point. So I'd say it's kind of like intelligence, and then that intelligence is the raw intelligence, and then the domain expertise. So founders working within a domain that they know well, again, according to our data, have a much higher likelihood of raising money more quickly. Now, again, we need to see that longitudinally to be able to say that's a certainty, and if we you know, anybody with a encyclopedic knowledge of global venture investing would be able to list a ton of companies that work against that stat, right? Like Travis Kalanick was certainly not a guy who knew a lot about ground transport before he started Uber,
right?
But there is, again, we see a strong correlation there.
Yeah. So if I'm going to create a new business, you know, producing hydrofoils, you'd want me to be someone that's surfed and knows tides and has been around boats and
right.
Okay.
Or you know, or have the math, or like have the math background, or like, you know, again, you know, it's not that you can be, it can be adjacencies. There are obviously adjacencies that work, but like, you know, I mean, a simple one to think about is, hey, you're coming up and you're building an insurance company. We're going to build a challenger insurance company, which involves you writing insurance product that is novel. Well, gosh, you better have written a lot of insurance product before if you're going to do that well, right? And that needs to be in the founding team. Another one is kind of like the what I like lateral thinking, just the ability to just kind of come at problems with with fresh eyes. And that's why our residencies are particularly important. I'll give you an example. Probably my favourite example. I don't always talk about this, but I'll change his name. But we had one of my favourite entrepreneurs. Let's call him Rajiv. One of our first cohort. You know, you can imagine we've got all these new people coming in. It's the first time we're running it, and we're just we're having this big reception, and he comes over to us and he's like, "Hey guys, it's great to be here." And we're like, "Hey Rajiv, good to see you." He's like, "Listen, I need your time." And we're like, "Well, it's the beginning. Like, can you see this is a cocktail thing?" Like, you know, and he's like, "No, I just need 5 minutes." And we're like, "Okay." And he pulls us to the side table and he pulls his laptop open and he goes, "Hey, listen, I've got a spreadsheet here, and I've stack ranked every single person in the residency based on their abilities, and I just want you guys to work through it with me and make sure that I got this right." And it sounds kind of crazy. And that's because most founders are kind of crazy. But it is that sort of like detail and strategic thinking that makes him a fantastic founder, and just that you would be, you know, to be on top of things is, you know, and he runs one of our, you know, or jointly runs one of our top companies. A similar thing. So like I look for tidbits like that. I'll give you a similar example, and I think this feature is hard to spot, but particularly important, is the ability a great operator, or particularly a great founder, will be able to internalize what appears to be an external, or what appears to be an external problem. Okay, so we had this amazing portfolio company here in Melbourne called Sapien. And the founders, it was right during COVID, and the founders weren't sure really what they wanted to do. So this is already going to go against my domain expertise, because these guys definitely were not working in male fertility before they started. But one of them went to a family gathering, and his uncle was complaining incessantly about the fact that he spent $100,000 on an IVF treatment, only to find out subsequently that he was infertile. And Ash was like, God, why is that? Why is it? And it turned out that, and it remains the case, that actually male fertility very hard to get tested unless you go into a lab, and a lot of people are very reluctant to go into a lab to get fertility testing, and the reason they can't do that is they can't get a sample to remain stable outside the clinic, right? They need to test it very quickly, and then he was working with a guy who'd studied pharmacology, and they were like, surely we could just create a stabilizing agent that would mean that we could do this. And right, so they took this problem that nobody had solved, that was effectively having a massive implication on people's lives, and they were like, well, we'll fix that part. Let's fix that part, and then we will change this industry. And that's exactly what they did.
Wow.
And then the last one, sorry, I know this is a bit long, but is the grit and tenacity. Is just grit and tenacity. We have my favourite one on this is we have a lady called Vandana. She applied 9 times to come and work with us. We kept declining her. Then she was like, just let me have a phone call with you. She had a phone call with the head of recruiting. The head of recruiting was like, I can't tell this lady. I can't say no to her. She just keeps applying. And I was like, just put her on the phone and I'll speak to her. And she called me up, and I was like, hi, Vina, it's really lovely to chat to you. And she's like, oh, hi, Bede, I really want to come and work with you guys. And I was like, I know that I'm sorry, we've kind of made the decision. She's like, well, I'm just going to keep applying until you let me in. And, and she's, it's amazing, she just, what's interesting about that is you take that slice of a way the person acts, and you go, okay, can I see that replicated in the way that they act in each and every instance that they are. And when you start seeing that behaviour replicated, you say, well, look, this doesn't tell you that this person is going to be able to create an amazing business, but this is a foundational behaviour to creating a massive business, and those are sorts of things we're looking for.
Fantastic. Well, there's the 4 things, and they're not necessarily things you're born with. Raw intelligence, domain expertise, lateral thinking, grit and tenacity. It's actually one of the things on executives' radar at the moment is, if you've got an upbringing that's quite comfortable, grit and tenacity, or the urgency to really, without the struggle to develop grit and tenacity, or the desire to really sort of go above and beyond, may not be there organically. So. Yeah, just I find that last one interesting, and absolutely. I mean, if you're a founder and you're willing to go on that journey and be paid next to nothing for many years and take the risk, then that's fantastic. Well, thank you for sharing that. And so anyone listening in can start sort of honing in on those 4 areas and get their application. I mentioned 120,000 people you mentioned worldwide. There must be some. Obviously, if you focus on those 4 things, you might be able to stand out. And unless you're like, was it Vanka that kept applying and with her grit and tenacity. So, Bede, I had another question. So let's assume that the 4 things that you're looking for, you've found them, you've got your cohort. We're still in sort of risky business because maybe there's something that's not formed. Maybe coming back to the commercials and how you can sleep at night. With so many, investments or partnerships, whatever it is that you call them, across the board, how do you manage a portfolio that is inherently, at a singular level, very risky?
That's a good question. So Antler is the world's most active investor. We've made over 1,000. We've made many more than that, but publicly we've made 1,000 investments now. And we are, I think it's PitchBook that rates us as the world's most active firm. And corollary of being very active is that you have a big portfolio. So we do have a lot of what we're finding is our value proposition, our commitment to the people who work with us is, hey, we're a day zero investor, but we want to work with you throughout the life cycle of your company. We want to be there from day zero through to exit. And so, firstly, that influences how we've structured our firm and our fund structure. So, our early stage funds, like what you have here in Australia or in the US or Southeast Asia or what have you, these vehicles now are pre-seed through Series A vehicles. They are there really to help you through, this particularly like the founder-led part of the company. And again, don't want to suggest that it's not founder-led later, but like that where really it's putting things together with sticky tape to make them work kind of territory. That's the part, right? So yes, that still means that you have a pretty active, large number of companies that you're handling. What we have found is that first 9 months after an antler investor, 9 to 12 months, is really the critical period to setting the foundations for a company to be successful. And so
first 9 to 12 months after the
investment
pre-seed.
Yes, exactly, after the pre-seed. Now, look, there is some, it's probably better to call it the antler investment, because you will have investors regularly, particularly in Australia, we will have where it's a much less mature venture capital environment still, and a more challenging venture capital environment or finance environment. You will have funds or individuals that come in subsequently who still call that pre-seed. But so the first 9 to 12 months are really what matter, and so we work incredibly. That's the period of intense work with all of the newer investments to try and set them up to get them on the right setting, and realistically, there are kind of two parts to that, plus a third. The two main parts are, hey, what is your capital strategy? How are you going to raise money for this business? Because it's absolutely essential, and it will realistically or most likely drive whether or not you can be successful. And then the second part of that is, what's the go-to-market for this business? How are you going to get a product in front of users quickly to start providing you with information about whether or not there is demand for the products that you want to sell?
Yeah.
And then the plus three is helping them with the numerous other things that will naturally come up in that period, that and which differs from company to company. Hey, we need to hire an engineering lead, and we don't have any technical skills. Or we're having problems with our Google advertising performance. Like, why is that the case? Or whatever it might be, right?
So they get that whole infrastructure to sort of lean on and support, which I guess, that 9 to 12 critical months would certainly help. And so, and I guess you mentioned there sort of what is the cap strategy. So these sort of companies are sort of leading with a cap strategy. So obviously it's going to be a scalable product that, and then they're aware of the inflection point, and you're helping to guide them to basically an exponentially... a business that could potentially exponentially... Oh, my God, that's a lot of...
Grow. Yes. That's the one. You're looking... in that early period, what you're looking for them to be able to do, right, is go out, right? If you think about a go-to-market, it's saying, okay, well, what's the problem that you're trying to solve?
Yeah.
How are you solving it? And who are you solving it for, and how do you find that person, right? And it's kind of the funny thing about I find in a lot of business, it's not the concepts that are complex. They're not intellectually complex concepts to grasp.
Like what they're trying to do, the product or the service, or
it's distilling down what that actually means for them to do, and like the different tactics that they can employ in order to determine the answers to that. It's like, oh, hey, like, actually, it turns out I shouldn't be going to the chief revenue office. Like, chief revenue officers are not really interested in this. This is a FinOps thing. And so we need to be going into businesses that have a FinOps department. Well, to have a FinOps department, you need to have at least $3 million in revenue. Here are the identifying signals of a firm or a company that looks like that. How do we get a list now of those ones? How do we get into, like, what's the best way to speak to them? Do we speak to them through a content strategy? Do we speak to them, right? All of these, it's just this kind of working gradually through all of those different things to kind of land on. And again, if you want to get to what's a good seed stage company look like? It's like I can turn up and I go, hey, we sell into FinOps. We sell into FinOps leaders. Who are running companies where there is more than $3 million in revenue, where they've got cloud spend of, in excess of $250,000. I made those numbers up. They probably don't stack up, right? But like the point being that they have a really clear idea of, this is the customer, it's who we sell to, this is how we get them on board, this is our conversion rate of getting them on board. It's kind of getting to the point where it becomes a little bit more mechanistic or calculable how successful the company will be.
Yeah. And you mentioned, so we were sort of having a chat last week, and I've only probably scratched the surface in terms of areas we could have gone. But one thing you did mention in the VC space, more broadly, this concept of power law, which I'd never come across. So maybe if you can share how that works, or if you've seen it work, or it'd be interesting to tease out that concept.
Yep. So power law is the concept that in venture investing, the returns that you earn from your top asset will be larger than the sum of N2 through infinity, like whatever the additional number of them is, right?
Yeah.
And I think this is actually very easy for people to conceive of, because probably most, maybe I'm being very presumptuous here, but I suspect most of your listeners, would know Early Blackbird Fund invests in 3 exceptional Australian companies, Canva, Safety Culture, and Culture Amp. Now, plainly, Canva is one of the world's largest privately owned software companies. And the returns that would come from having, assuming that you had relatively equal investments in each of those companies, the returns that come from that are larger than what will come from both Safety Culture and Culture Amp and all of the other companies that were created within that fund.
Yeah,
it's that simple. Now that influences, again, that's the big consideration when if you are a founder and you are trying to go out there and raise venture capital, what the venture capitalist is praying is that you're the next Canva, right? And that you're not just a $1 billion company, you're not just a $10 billion company, you might be a $40 billion company or a $70 billion company, right? That's because essentially whatever that largest asset in the fund is, that is really what will define the success of the success of that firm.
And is there a number? So like Blackbird, there's 3 amazing investments, but they're obviously within.
I don't know that, by the way. This is that's me looking publicly at what the situation. I mean, but again, it elucidates the point. Like it's like most Australians can look at that and go, yeah, okay, that makes sense.
Yeah.
And
is there a sort of, getting into the model a little bit here, but like with stock investing, you've sort of, there's a bit of a rule around you need more than 7, and then you've got a bit of diversity, and then your diversification incrementally reduces with 12 or more. Or something. I'm trying to go back to a seminar I once came at. With an early stage venture fund, is there such a thing as early stage venture fund? So you only got $1 million, so then you'd only. Am I overcomplicating the thinking?
You're right. We think. You could easily get mired in just like the complexity of a decision at every point. But in principle, what Antler is interested in doing is saying, hey, we want to look at as many people as we possibly can. We want to work with as many people as we possibly can. But we hope that our selectivity increases over time. Right. In other words, that we have more people to choose from and work with fewer of them. It's so that's the first point, and the second thing is, well, when you come and work with us, what we know is, hey, we need to have you working with a cohort of larger than more than 60 people. Like, it needs to be in that residency more than 60 people for the kind of all of the positive interactions to work. So between 60 and 80 in your direct, some of that, we have a lot of funds that are across multiple geographies, and so but within each kind of core group, it's roughly the right amount.
Is there a bit of a peer effect there where they're rising?
Absolutely. I mean, there is, but I mean, that's like if you're thinking about going and building a business, why would you opt to do that in any other format than say, okay, well, I can go into a room where there's 60 other people who are doing that at the same time, and have that as a peer group, have that as a pressure group. I think it's a very kind of fecund environment.
Sounds better than the garage.
Yeah, that's right. Exactly. And yes, so our we typically our early stage funds, again, this has changed a bit with the way that they're constructed, but they make about 100 of these these pre-seed investments. So it's pretty heavily diversified.
Great. So thank you, Bede, for sharing. It's kind of like, so whilst there's risk around it not working, there's obviously risk around it, working exceptionally well. So I guess I was probably maybe coming at risk from, maybe a fear perspective. So you've helped broaden my perspective, and sort of looking at those 4 traits. So you're getting the best people in, which is, giving you a really good cohort of maybe 60 to 80 people. You're obviously getting the right environment around them to, accelerate things like that are not specific to that business, whether it was Google ads, those types of things, and really setting it up for the best chance. I mean, I don't know how you got this job, Bede, but it sounds really fun.
It is. It's a lot of fun, and you're right. Like, there's a lot of risk there, and it's very easy to think and spend a lot of time talking about the risk, because every day, of course, you're confronted with a lot of you're confronted with bad news. Like, people are like, God, I don't know how I'm going to do this. I'm running out of money. Blah, blah. But you're also every day confronted with these stories of people doing extraordinary things and just scratching your head and being, wow, I can't believe that they managed to pull this off, right?
Yep.
So, and I'll come back to like the guys at Sapien. Guys at Sapien had just invented this fixing formula that allowed them to take the men to take samples in the home, right? So it's unbelievable. How'd you do that? And they wanted to go start testing it. And just then the Victorian government closed everybody into their homes for COVID. And we were like, how that's so unlucky, like that you were right on the cusp of being able to do this and offer this service, and now government regulations come in. And they were like, and then a few days later they called us up and they were like, hey guys, we've worked our way around it. And we were like, what? And they were like, yeah, we're Uber drivers now, because as an Uber driver you can drive anywhere in the city. So now we can drive around and pick up samples as Uber drivers.
Just
it's just like
Uber it to the lab.
So it's just lateral things. You're just like, yes, so clever that you just that you found a way around things. So
I imagine that model in COVID was probably the only model.
Right.
You can't go into the. Maybe you could have gone into the lab. Yeah, but God.
But it's just like you hear that, you go, wow, and this, so it's like obviously as a fund manager, I have to pore over the kind of the hard data and I'll look at things, but it's and you have good, we're in the midst of a very, very good quarter, very lot of super positive news for us, and it's great to be that. But we have certainly had quarters in recent times that have been horrid. And you have to understand that particularly early stage investing it's non-linear. You cannot count people out. One of the entrepreneurs I've talked about today, and I won't say who they were, but like one of the entrepreneurs, we were in the process, we were chatting to them, or we called them to be like, hey, listen, like I'm going to have to register, I'm going to have to say that we're like writing this off because I just don't think that you're going to get there. And they were like, I just closed $600,000. And we're just like, how did you do that? Like, where did that come from? Like, out of nowhere. So, there's a lot of these very like positive and exciting human stories that I do love about this job.
Fantastic. All right, thanks, Bede. I think I could definitely sort of pepper you with questions all day, but I know we've got to get you to a luncheon shortly down the road. But just a couple of more maybe short answer questions. And before I jump into that, I know you've had a bit of time thinking on the plane. You probably sort of had an idea about a question I might ask. Was there anything I didn't ask you today that you thought, actually, or maybe it's a closing remark where you think, maybe I'll just share this comment?
I think that the thing I would say about building companies is it's a very I'm not going to say it's an addictive thing, but the thing that I commonly notice is that people even who come and do it with us and who aren't successful, one of the most regular things that we hear is that's just changed my perspective on working and like what I'm going to do and how I want to spend my time. Like I just lots, particularly people who've come, been whatever 5, 6, 7, 8 years in corporate, and they just go that like I can't work the same way again. Like that was so cool, and like that's always a lovely thing to hear. It's a very, very hard life being a founder. Building companies is it can be very lonely, and you wake up early. And I remember that obviously starting Antler in Australia. It's the same thing. We're starting our own business, and it was very, very intense. But it's exhilarating, and there's not a lot of other things out there that are like it.
Couldn't agree more with that comment, Bede. All right, so I know you were struggling with this one around a quote, but how did you land in your mind? Are you going to share the quote, or are you?
I honestly, I don't. It's really interesting. Is this the problem that I don't have a favourite quote? There is a good quote that I like, which is fall in love with the problem and not the solution. Which is I forget his name, but it's from one of the Waze co-founders.
Yeah.
And I say it a lot to early stage founders, and particularly sorry for these people, but particularly to engineers. Like engineers love to get really psyched about the stuff that they can build and how beautiful it will be.
Yeah.
And really what matters is, hey, do you love the problem that you were solving? Because if you can think about the problem, and again, I go back to Sapien, like they thought the problem was, how do we test more men for fertility to have them lead better lives? That was what enabled them to think laterally around, well, we have to bring the solution to the home. Right?
Awesome. Yeah, no, it brings that lateral thinking to life for sure. Well, thanks for sharing.
Yeah.
I know you were sort of on the edge where you're going to go with that one.
Thank God.
So I guess maybe this would be an interesting answer to interesting to see how you answer this, knowing that your younger self has had both a successful and a business that didn't commercially work. And now you've sort of been involved in many different investments. But what advice would you have for your younger self?
I thought about this. Is a good one. It leads to a lot of soul searching. This question on the plane. I think actually, keep adventuring. I am really glad that I chose a non-linear path in my career. Like I've really kind of built most of the things I've ended up doing, and some of those have been successes and some of them certainly haven't. And I don't know what that's going to mean over the course of we'll look back and see whether or not that was an intelligent set of maneuvers, but I think it makes for a much better life experience, and I've had a great time so far.
Cool. And just last sort of short answer question: any books or things that you think in light of this conversation that either you found useful, or if you've seen other founders find useful, or just a book you'd recommend?
I don't read business books as a point of principle. Like Rise and Fall of Great Powers by Paul Kennedy. If anybody wants to understand how empires rise and fall, one of the great texts. I recently read Germinal by Emile Zola, book that he wrote in 1873. It's really one of the most it's just an incredibly intense story about coal miners in the north of France in the 1870s.
So you've sort of that's not the Dutch colonial history. That's
it's in the zone.
Getting a bit of,
okay. I can't read anything that's not history, basically.
That's fantastic. Oh, good. Well, it always repeats itself in certain different ways. All right, now we're going to hop into basically 60 seconds where I'm going to ask you as many questions as I possibly can to tap into your psyche.
Oh, wow.
Ready to roll?
Scary, yeah.
Okay. Unicorns or rising stars?
Unicorns.
Global domination or hometown hero?
Global domination.
Big data or gut feeling?
Depends on the stage of the business.
High stakes or safe bets?
High stakes.
Rocket speed growth or steady climb?
Rocket speed growth.
Tech wizards or people magicians?
Oh, don't know what that means. That's just
I don't know either.
Bamboozled. Pass.
Crunching numbers or reading minds?
Crunching numbers.
Worldwide network or local squad?
Depends on the context.
Founders flair or team synergy?
Found flair.
Big wins, steady gains?
Big wins.
Epic success stories, cautionary tales?
Epic success stories.
Data geekery or intuitive mastery?
Commercial nous.
Shiny new startup or rising treasure? These are getting a bit cryptic.
Rising. Right. If I tell you anything else, my LPs will kill me. Rising treasure.
All right, and the last one, which is it's an easy setup for you. Play it safe or go big.
Go big.
There we go.
I think that was very obvious. That's pretty clear. That thing.
Oh, I had 3 more left, so we'll have to save them for the next recording. But thank you for your time today, Bede. It was certainly a super interesting topic, and yeah, like I said before, I don't know how you got this job, but I mean, what an interesting sort of place to work in, and yeah, thanks for being so open and honest. And sorry if I dug deep in certain areas, but I just found it super fascinating. And thanks for the conversation.
My pleasure. Thanks for having me. Really, it was good fun.